The 50-30-20 rule is a budgeting strategy that devotes set portion of your income to the categories of needs, want, and savings. This money management rules was covered by St. Elizabeth Warren, a Democrat from Massachusetts and a former professor, and her daughter Amelia Warren Deggy in their book All Your Worth, the Ultimate Lifetime Money Plan, in which they describe 50-30-20 rules as a way to balance household finances and get ahead. Hello and welcome back to OnlyPay. We'll be discussing about 50-30-20 rule of saving you must know about. Be sure to watch all the way to the end. If you are new to the channel, then hit the subscribe button below from our life-changing content. Now, let's talk about what is 50-30-20 rule. The 50-30-20 rule is a budgeting strategy that allocates 50% of your income to must-haves and 30% to wants and 20% to saving. It is a simple plan that works well for those who wish to place each of their expenses into one of just three categories and make changes to their spending and saving habits as needed. 50% for needs. Needs are things you can't live without. The 50-30-20 rule budgets have half of your take-home pay towards these essentials, which often include housings, groceries, utilities, health insurance, transportations, loan minimum payments, childcare. There are some additional rules of thumb to consider within this category. For example, personal finance experts recommended spending no more than 30% of total income on housing. That leaves 20% of your paycheck to cover the other essentials. Depending on where you live, keeping your mortgage or rent payment under 30% of your income can be difficult. You might have to take cuts elsewhere in your budget to keep your needs spending at 50% of your income. 30% for wants. Wants include non-essential spendings or discretionary spendings on things like gym membership, trips to the movies, vacations, dining out, and streaming service subscriptions. These expenses may include hobbies, dining out, vacations, gym membership, movie tickets, concert, subscriptions, non-essential clothing, and non-essential services. Everyone needs some fun in their life, so it is important to devote some of your money to things you enjoy. Setting aside a specific portion of your income for this purpose gives you ability to start a new hobby or a book weekend gateway and still maintain your budget. You can also use Bank Rates My Money tool to connect your bank, credit card and loan account in one place. This helps you to categorize your spending transactions, identify ways to cut back and improve your financial health. 20% for saving. 1/5 of your income should go to saving and investments. Experts recommended having an emergency fund that can cover 3 to 6 months' expenses. An emergency fund comes in handy when you encounter an unexpected expense, such as car repair or doctor bills. If you are saving for retirement, consider investing in tax advantage accounts like 401k or IRAs that let you deduct all or part of your contribution from your income when you file your taxes. Using one of these tax-friendly retirement savings accounts funded with a tax dollar can help you save money than you otherwise would. If you have debt, you can dedicate a portion of your saving to make additional payments to pay down your balances. This is even more crucial if you have high interest debt such as credit card or debt or auto loan insurance. This will get you out of the debt sooner. Freeing up space in your budgeting in the future, it also helps you save money on interest payments. An example of a 50-30-20 budget. Determine your income. Let's say you have $2,000 deposited into your bank account each month from your job. An additional $100 was deposited into your 401k. That gives you a total monthly income of $2,100. If you are paid bi-weekly, there may be months where you received 3 paychecks. Identify those months and adjust your total income accordingly. Apply the spending threshold. If you used the 50-30 rule and be allocated $1,050 for needs. 2000 into 0.5 is 630 for wants, and 2000 into 3.0 the and 450 of savings, $2,100. Point 2. Plan your budget around these figures. Take a look at the current spending and plan to adjust it to these dollars and amounts future in months. Is the 50-30 rule budget right for you? The 50-30-20 rule is a simple budgeting strategy that can eliminate the need, create detailed budget and price spending amount and a dozen or more line items. It also provides a framework and you can be beneficial for that. The 50-30-20 rule may not work for those with the low or high income. Minimum wage earners, for example, may have a dedicate more than their incomes and necessities, leaving them less money to spend and wants to saving, whereas highly paid executives who make $1 million a year may not need to spend $40,000 on necessities each month. What experts say about 50-30-20 rule? Greg McBride, CFA, Bankrate, Chief Financial Analytics, agrees that this budgeting strategy might not be for everyone. Many households may have difficulty implementing the 50-30-20 budget because they are currently hemmed in a high housing, insurance and childcare cost that push them well above 50% of net income. McBride says, in any event, start with the saving component by automating retirement and emergency savings, contributions via payroll deductions or automatic bank transfer, and look to increase the amount you are saving and each pay rise and every time you pay off the debt. The 50-20-30 rule is relatively easy, but it may require work to discern between wants and needs, say Chloe Morrow, CFP, founder of Financial Staple, financial planning firm. The idea of setting up budget can be immediate or confusing. This strategy provides a relatively easy guideline, Moore says. You can also evaluate your current spending and saving against this strategy as a way to see how you measure up. It can be hard to sort out wants and needs. These categories are very subjective. For example, food is need. Some grocery could fall into the need category, while other groceries or dining out could be considered a want. Bottom line, the 50-20-30 rule can work well for consumers wishing to simplify the budgeting process and to ensure they are putting some of their money into savings. So, it might need to be modified for a lower or high income individuals. It can provide a basic framework for getting household funds in track. If you enjoyed this video, don't forget to hit like and subscribe, and be sure to turn on bell notifications so you don't miss any video just like this one. Please give us your thoughts in the comment below, and we'll see you in the next one. Thanks for watching.